When I look at things like the Wall Street Silver and the hashtag silver squeeze and the hashtag keep stacking and all that stuff, when all that stuff started, it was really an inverse indicator, right? They were thinking they were contrarian or being contrarian, but really, I was contrarian to them. I was selling silver stocks in my letter in March of 2021, right?
Special coverage of the New Orleans Investment Conference is brought to you by Victoria Gold, leading Yukon's new gold rush.
Welcome back to SF Live. We're here at the New Orleans Investment Conference. My name is Kai Hoffmann. I'm the @JR Mining guy on Twitter and the CEO of the Soar Financial Group. And we got some special guests here. Nick Hodge, first time on SF Live. You are the co-founder of Digest Publishing and also the publisher of Daily Profit Cycle. It's great to have you. We've seen each other a lot of times. We've never really had a chance to chat.
Kai, it's great to be here. Thanks for having me.
Yeah, awesome. Yeah, let's dive right in. We're trying to keep the conference interviews a bit shorter and snappier. What are some of the themes you picked up here? It's been 24 hours now.
Yeah, it's relatively bearish. I mean, you're in, I think, a bear market for not only stocks, but the metals as well. And this is, traditionally a metals conference. We were talking before we started recording about a pivot, and I've taken to silencing the T in pivot and calling it pivot because we're going to continue to wait for it like Godot, who never came, right? So I think it's a bit downtrodden, if I'm being honest. If you look at the charts of the companies in the exhibit hall, they're down and to the right? Opposite of what the investors here would like. So everyone wants to know when things are going to turn around, and so I think the sentiment is a bit negative.
Let's start there actually with our conversation. Obviously negative sentiment. We have a higher CPI print today than expected. Gold was down 1.6% intraday, and all of a sudden we're green. Really interesting times. Where do you see things headed right now? And maybe let's talk a bit Fed rate policy as well.
Yeah, it's easy to come up with a narrative on days like this. A couple of weeks ago, bad news was good news because bad economic news means the Fed is going to pivot sooner than anyone thinks. And today we had bad news and a higher CPI, and the market's tanked and then turned entirely around, like you said. So it's easy to come up with a narrative. And what I'd like to do is take a step back and look and see where we are in the overall trends of things. I think we're in a bear market and a recession that materialized a quarter ago when we had the second negative GDP print for the U.S. And so I don't see a lot of improvement for a half a year, call it 2 quarters to come. So we're in the midst of earnings season for the S&P. They're going to be not negative, but they're on their way to negative.
Well, all the outlooks are negative. Guidances I've been hearing is.
I mean, FedEx pulled guidance.
Yes,
I mean,
that was last week.
They see all the packages that go. They're calling for a global recession. The McDonald's CEO says we're in a recession, and you've got these earnings that were really good in 2021 because you remember everyone got checks in 2020 for the pandemic. Exactly. They spent those checks, and corporate earnings were good. Corporate earnings growth last year in the third quarter was 40-some%. This year it's going to be between 4 and 6%, and it's likely going to go negative. So you've got these things that are really driving the economic contraction, a contraction cycle that we haven't seen in quite some time.
Yeah. Do you see the Fed hiking continuously? Do you have a target rate in mind? If you take a step back, is there sort of a ceiling you think they're going to hit at some point?
I mean, everyone's an expert on the Fed, and I'll be the first to admit that I'm not. So, the Fed did the wrong thing at the wrong time. They're one of the causers of this recession, certainly one of the causers of this not record inflation, but 40-year high inflation that we've seen. And now they're saying that they're going to land the plane softly, which I don't buy. At least Jerome is giving us a bit of honesty, saying to prepare for pain. Right? They're already at 2.5% on the federal funds rate. The expectations say they're going to 4.5%. I think they hike a couple of more times, and I think they have room to, right? Because one of the Fed's mandate is employment, and the employment market sort of hasn't been affected yet, right? If you look at the traditional way a recession cascades, it's sort of earnings and profits and housing first, and then employment last. And so, employment in the U.S. has been relatively strong, and I think as long as that holds up, the Fed can continue to hike. And that's why I say people that are waiting for this pivot, I think they're going to have to continue to wait a little bit.
We're pretty much at full employment right now.
That's
3.5%.
Exactly right.
That's pretty much full employment.
That's exactly right. But you're going to see that start to go in the next couple of quarters, right? We were just talking about shrinking earnings and the economic contraction. I mean, that is going to lead into layoffs, but not until you get a couple of more hikes, I think. I mean, the market's pricing in 4.5% on the federal funds rate. And, that starts to cause real pain, not just on Main Street with the mortgages already at 7%, potentially going to 9 or 10% if they go that high. But things really breaking in bond markets and credit markets. I mean, and I'm not not really an expert on that, but I'm certainly a watcher. And I see things in England starting to break. I see credit default swaps for Credit Suisse and other banks going haywire, and so things are starting to break. But the Fed says some pain, and I think they hike a bit more.
It'll be interesting to see. You mentioned cheap money, and it brings me sort of to the meme stocks as well, and sort of what we've seen in the last 2 years. And I've been watching quite a few YouTube finfluencers, on YouTube, for example, in real estate. They own 100 apartments and talk about how great everything is. They're big real estate moguls. But it's all financed, right? So when you're talking about 9-10% mortgage rates, I'm curious who's going to survive the next 12 to 24 months.
Yeah, there's going to be a lot of Instagram accounts that go away. I've been seeing them as well, right? There's all these experts on TikTok and Instagram, and I see, but I'm not sure how long they've been in the game and how many real assets they own and how many economic cycles they've seen.
You might have to look for a real job at some point. Right?
That's exactly right. I think that's coming. And what's interesting is some of the advice that they, let's say, push has been wrong. You mentioned memes, and my talk is about meme stocks and some of the social media influence that's come in, especially about silver, because we're here at a precious metals conference. And when I look at things like the Wall Street silver and the hashtag silver squeeze and the hashtag keep stacking and all that stuff, when all that stuff started, it was really an inverse indicator, right? They were thinking they were contrarian or being contrarian, but really I was contrarian to them. I was selling silver stocks in my letter in March of 2021, right? That was when silver was at $28. When that whole movement started, silver's going to the moon, right? Well, silver's gone from $28 to $18 in that time. It's lost a third of its value, and so some of this advice about, and I get it. I was young once. I was in my 20s. I read about the Fed, the creature from Jekyll Island, all these conspiracy stuffs, the Council on Foreign Relations. And I get the fear, I do, but it's not how you need to invest on a day-to-day, right? Like, they're not coming to feed you bugs, and there's not going to be some central bank digital currency that supplants everything. Like, that's just not
Investing with emotions is just not the right way to do it.
That's exactly right. And death of the dollar is a big one, which is a good point, right? Because I see, the dollar's going to fail, all this inflation is so bad, but if you actually look at the dollar, it's been one of the strongest asset classes for the past year. I mean, you've got a DXY index that is up around 115 at some 20-year highs. And so really the place to be has been, hashtag cash is not trash. I mean, even Ray Dalio pivoted in that respect.
No, there's so much exactly going into that. And let's talk a little more about memes and to the moon, like a requiem for rabbit or
rabid Redditors.
Yeah, let's talk about that. Like, it is an interesting indicator. And a lot of here are followers of those channels as well. Like, talk about some of the points in your presentation.
Yeah, well, I talk about being a contrarian's contrarian, right? We've got to a point where, contrarianism has been usurped or adopted by this, this cabal of, social media gurus and YouTube gurus, and, everyone's an expert on finance and things now. But like I say, I found them to be an actual contrarian indicator. I mean, a couple of weeks ago, we had a slight pullback in the dollar, if you remember, and a slight pullback in
from 114 to 110.
And hashtag silver squeeze started trending again. And once again, it marked the 2-month high for
It's
silver.
crazy. I have to admit, like, one of our videos, they had silver squeeze in the title, and I think the title "One Bank's Just Got a Taste."
Yeah.
Right. Best performing video.
Right. So I think memes are great. I love looking at memes. I think they're funny. I love poking fun at the government. I think they're inept. I think the Fed is a unelected group that really, sways power over our global finances. But at the same time, you can't invest based on memes, right? Like, I see this one meme with this girl, and sorry to make this a meme conversation.
It's awesome.
It's this girl. She's running away, like screaming, giddy, and the text is, every time I leave the coin dealer, I realize, and realizing that I just gave them paper for coins. And it's like, the paper that you just traded in has been stronger than the coin for the past year. And so maybe you can get in a conversation about time frames. At some point, there is going to be, a gold run back to 2000 and a silver run to $30. But it's not going to be in the next 6 months. It certainly hasn't been in the past year since all this, silver talk started going around. And so I think you got to work yourself through this recession, maintain a healthy cash position. I write a macro letter every month, and we were were in a third cash to start the year, and now we're in 50% cash. And so, I mean, there's not a lot to do out there unless you're a shorter or a put buyer. But, in a couple of quarters, when we get back to actual economic growth, as, I think inflation has peaked. It remains stubbornly high, but it's not 8.3%. It's, 6.
It's 8.2 now.
Well,
core CPI is 6.6.
Yeah, the core, yeah.
Yeah.
And so, but as that starts to come down and we get back to real economic growth, there's going to be a place to buy stocks again. And if you think back to previous recessions, which again, some of these social media crowd don't remember because they're too young. It's been 12 years, or whatever it's been. You're going to get to a point where commodities and the precious metals are going to rip higher. But history says it's on the backside of the recession. Gold didn't take off until 2010, 2011 after the last one.
Yeah. What are you advising your readers now for the next 12 months now? It's 6 months. Let's take 6 months because 12 months is a long time away.
Yeah. So I write 2 newsletters. I write a safe money one, a retirement one that's monthly, more macro focused, and then a speculative one where we deal with some of these penny stocks and TSXV stocks and things like that. So on the safe side, like I just said, we're in half cash.
Yeah.
We're in a little bit of gold. We reflect that with like a GLD ETF, for example. And then we're in a couple of high dividend yielding stocks, like on the consumer staple side of things, like tobacco stocks, for example. But
Johnson & Johnson, Nestle's, I guess.
I mean, we don't own those specifically, but those would be good examples. Yeah, exactly. General Mills would be actually a really good example. And that's how we're weathering the storm. We sold NASDAQ late last year. We got out of energy stocks. Every sector except for energy in the S&P is down for the year. And so I'm just telling them, maintain your cash position. There'll be things to buy on the back side of this. And then on the speculative side of things, it's almost the same thing. The TSXV is down 40% for the year, Kai. And so if you're speculating, it's been a tough road
look at my account, look at my portfolio. It's rough.
Exactly right. And so, like I just said, down 40% on the TSXV, and we've lost, I don't know, maybe 8% in that letter or something. And some of the equities we do hold, they're up because we were in them for so long and we got really good prices. Like we're up on some uranium names, for example. But if I look at the cannabis space, or if I look at the psychedelic space, which I do like as a sector, it's
that's completely beaten up.
Exactly right. And so about half cash in those speculative positions as well, and really not looking to deploy capital. Normally I would go in this exhibit hall and talk to 20 companies, and there's maybe 3 or 4 on my list that I want to talk to.
I haven't been in there yet either.
Yeah.
I have to admit, I haven't been in yet. So not too intrigued because I know I've got time.
Exactly.
What do you make of tax loss selling, maybe, as one of the last points?
Well, it's going to get really bad. So you're going to get some really cheap prices. There are some speculations, I'm talking about junior mining companies now, that are trading for close to cash or less than cash. They become attractive. The problem is, how cheap can they go? So tax loss selling is going to be really bad this year. There might be some opportunities to pick up some names, maybe in the commodities that have held up, like lithium and uranium. But on the whole, it's going to get worse before it gets better in the speculative metal spectrum.
Very last question. If everything's down, there's got to be a bull market somewhere. Do you see one right now?
So I just mentioned lithium. Lithium carbonate's still at $70,000 a ton, so that hasn't gone down too much. Uranium prices are actually marginally up for the year. What's gone up? The energy complex is still holding up okay, the oil and gas space. And then some of the softer commodities. So if you look at like the entire CRB commodity index, that holds 19 commodities, and they're not all metals. If you look at some of the softs, like wheat and corn, for example, those are doing okay.
Okay, perfect. Awesome. Nick, where can we find more of you?
So you can find at dailyprofitcycle.com. We have daily editorials there, and then at digestpublishing.com. All the premium publications are listed there.
You're on Twitter as well, Nick Hodge.
Nick C. Hodge.
Nick C. Hodge.
There it is.
I'm slurring words. We've done like 10 interviews already today.
Busy.
So, Nick, thank you so much for coming on. Great conversation. Loved it. We'll have to do this again
Appreciate
very
it, Kai.
soon.
Anytime.
And to everybody else, thank you so much for tuning in. SF Live special coverage here from the New Orleans Investment Conference. Follow us on YouTube. Follow us on Twitter. Leave a comment. What do you think? We want to hear from you. And we'll be back with lots more. Thank you so much.